Hey everyone, and I'm here with David Sosa.
Your local, friendly neighborhood mortgage lender, mortgage banker, whatever you want to call it, right?
So, Dave, 25 years in the business?
25 years almost, my entire life. I met my wife actually in this building that I currently work in with the same team. And I love it because I've had people that, 20 years later can call the same number and they still get that service.
Absolutely.
So that says we're doing something right.
Yeah.
Right? At least I hope so.
Yeah, no, I think the Yelp reviews say so, right?
Thank you.
Yeah. And 18 years in the business now with our own team, with my own team, the Velvet Fence team. So here to answer some questions. Dave, what do we got here today as far as sipping? What is this?
So my friend over here is the wine guy, but so this beer, I'm not going to get into what it is. We'll talk about it in the end.
Yes.
But this was, we'll just take a sip.
Okay.
And
it looks rich.
And just know that this beer was brought and loved and sought after, and I picked it up, not because of myself, but because of my lovely wife. So let's try it, and then later on, we'll kind of go over how we got it.
So we're going to keep it as a mystery?
We'll keep this as a mystery till the end, I think, and then we'll explain what it is. If you really like it, we can talk about it now.
Okay.
But, maybe some people are on here just to get tips on what beers to buy, and we do want them to listen info. We know that this beer has a nice, fluff to it. So
the smell coming off of it.
What are you smelling?
It almost feels kind of a little bit sour, right? There's a little sour, lots of fruit.
Well, let's try it. Cheers.
Cheers. Let's see what we got.
Cheers.
Oh.
Dangerous, huh?
Is this even beer? I mean, wow.
Dangerous.
I think let's keep it as a mystery.
Okay.
At the end of the show, we're going to give you our thoughts. My thoughts on this, it is dangerous.
100%.
Yeah, this is 100% dangerous. It is different. I like that. You know what I mean? You and I, we have tried plenty of beers. You guys have tried plenty of beers.
So Way too many.
Right? So many breweries out there. This is different. I haven't had anything like this just yet. So, all right. So let's jump in the show. So today in the Clever Homeowner, we're going to be talking about the hidden costs.
The fluff.
The fluff, yeah.
Absolutely.
The hidden costs of buying a home and all the fluff that you get out there. So realtors, sometimes, not to talk bad, right?
Of course. Or bankers.
Right? They could be either excited about helping you. They could be, maybe jaded. They've been doing this too long. But sometimes they don't tell you all of the hidden costs when buying a brand new home or buying a home, right? So here we're going to cut right through the fluff. We're going to get to the real costs. Yes, all the out-of-pocket expenses. See how it's going to hurt your pocket now, but it will be an investment later. All right.
Absolutely. So when it comes to closing costs, guys, right off the bat, people ask, how much are closing costs?
Yes.
And I like to tell people honest truth. You're looking at probably anywhere between 2 to 5% of the loan amount. And the reason we bring that up, right, guys, is because, let's just say you're buying a house that's $500K.
Okay.
Those closing costs, might be anywhere from $12,000 to $13,000. And there's a lot of things that are involved in that. We'll break all that stuff down. But someone that's buying a house that's maybe $100,000, 2% of that's only $2,000. And that's probably not going to cover your escrow and your title and all the other stuff we're going to get into.
And we're talking California numbers, by the way, right?
Absolutely.
Every state is different.
Yep.
For example, I grew up in Pennsylvania, in Philadelphia, outside of Philadelphia. And we just sold our family home a couple years ago,
That's
right?
Yeah, mom and dad.
And man, the closing costs are completely different, way higher than here. Now, taxes are different and stuff like that, right? So it kind of averages it out. But however, the closing costs are pretty much close to 7 to 8%.
Oh, wow.
Over there. Yeah.
Big difference, guys.
Big difference, right? Here we're talking, what, 2 to 3%?
2 to 4 on average, usually.
Yeah.
And you kind of get into it, right? So I guess the first part that we'll talk about is a lot of times it's what's up front. And Mel we'll kind of get into a couple of them and we'll give you the things, but there's typically, guys, 3 things that you're going to have that are cost up front to you. Not necessarily right up front when you start talking to Mel or I, but these are things that you absolutely need to pay for. And some of these costs, whether or not you close on a property or not, there's still costs that are associated with looking at buying a house. And I'll talk about one, and I'll let Mel talk about one, because one is specifically designed for my side of the business, and the other one's specifically designed for Mel's side. So two of the upfront costs when you buy a house, obviously when you open escrow, you have your EMD or your earnest money deposit.
Your initial deposit.
Your initial deposit.
Yes.
And Melvin will basically talk with the listing agent, and that cost can be anywhere from how many percent?
That could be, it depends on the deal. Every deal is different. Most sellers would like to see anywhere between 1.5% to 3%.
Okay.
But of the purchase price,
Yeah.
as far as the initial deposit. But that's where having the proper negotiator or agent behind you plays a big role.
Yeah,
right?
Absolutely. The team makes a huge difference in that.
Exactly. For our VA, clients and stuff like that, man, I negotiate that way down for them.
Absolutely.
Right? So that out-of-pocket expense is very, very minimal. Now, it all depends, right? If you're buying a $2.5 million home, it's going to be a different ballgame.
Yeah,
right?
absolutely.
But having a strong negotiator plays a big role, because that goes actually in the offer or in the counter offer, right? To fine tune the deal.
So everyone knows what that is, right? Your earnest money deposit. Basically what that is I go to Mel and I say, Mel, I want to buy a house. I'm pre-approved. Mel, I seen this house, or Mel finds me this house. I fall in love with it. We place an offer and I say, look, this guy wants $1 million. I really want this thing. I want to offer $1.10 million, or he negotiates the deal.
Yep.
And part of that deal is I'm telling the seller and everyone involved, I'm saying, look, I really want this house, and let's just say it's $1 million house, right? And you're putting 10% down. So you're dropping $100,000 on this house, and you're telling the seller, look, I really want this thing, and I'm willing to give $20,000 within typically the first 72 hours of opening escrow, the first 3 days. Let's say you make an offer on a Thursday and you don't have time to get to the bank till Monday. Stuff like that's not a big deal. But what an earnest money deposit is that is you basically saying, look, I got a little bit of skin in the game.
Yes.
I'm basically telling people, look, I'm serious about this property. I want to buy it. So here's a little bit of skin in the game, and all that money does, it goes to a neutral party, which is your escrow company, and you're going to wire that amount to escrow, and escrow says, look, this is included. So remember, your earnest money deposit, guys, it's in a non-interest bearing account, and all it is you're giving money to escrow and telling escrow, hey, you can hold this money, but it's really just you showing that you are committed to the process.
And I think it's also good to mention that is part of your total down payment as well.
And your closing costs.
And your closing, right. So what that is, your initial deposit is going to be part of your down payment. It's going to be taken out initially, right? Your initial deposit, right? The rest of your down payment goes in about 5 days before, or 3 days before the close of escrow, right?
So what happens is, let's say your closing costs are, your down payment and closing costs combined are $100,000, right? Let's say it's $80,000 for your down and $20,000 in closing, and you give an EMD of $20,000. That doesn't mean at closing you got to bring in $100,000. It means they're going to say, hey, on this breakdown, it's going to show, hey, look, Mel, you need an extra, $60,000 for your deposit, and your closing costs are $20,000. Total fees were $100,000, but less that $20,000 EMD you gave. So the balance that you owe is $80,000, because that $20,000 that you gave up front initially is, again, it's included. It's encompassed in that total cost.
Yes. And then also remember that initial deposit is refundable. Let's just say that you are in escrow and you're finding everything out. We're doing the inspections, termite report, title report, all these things, and something doesn't check out well with the property.
Absolutely.
And you want out of there, you can totally do that. Okay? Meaning that if we don't remove a contingency, we can talk about that later, right? How that works in a different video. And then, and I'll put the link to the video in the description below, so you have a link about contingencies and how your deposit is refundable, and how you can lose your deposit as well.
Absolutely.
Okay, that'll be a separate
video. But again,
video.
just rest assured, if you get the right team, you're going to know. You basically are, for you to lose a deposit, you're going to 100% know that that your deposit is now at risk, because sometimes you get to a point in a transaction where you,
Yes.
Mel, we'll talk about these again, but it's called removing all your contingencies.
Yeah.
And at that point, you're basically telling a seller, look, baby, I'm all in. I got my loan stuff squared away. My inspections are good. I'm buying this house. And if at any point after I sign off full removal of any contingencies, if I decide to back out at that point, you could keep my deposit. And again, that's what that guy does. That protects the seller, because let's say you're tying up an escrow on a property for 30 days to close, and the day before you're supposed to sign your loan docs, you find a house you like better. You just can't say, oh, screw this property, I'll find something else.
And we'll talk about how that works.
Absolutely.
A little bit different. But however, 25 years, 18 years in the business, negotiating for our clients, we haven't lost a single deposit.
Nope.
Okay, so that's what happens when you have the right team behind you.
Communication's key, and understanding those things.
Exactly. Okay, so we have initial deposit, right?
And then the two upfront costs you're going to pay. I'll speak about one, Mel will speak one. The one on mine is called your appraisal.
Yes.
So your appraisal, depending on a property, I don't like giving out numbers, but let's just say on a standard home, that appraisal, depending on the state you're in, some places might be $400. Some other places might be $800. If you're buying a house over $1 million or something that's more expensive, or it's multiple units, or we need to include like rental income because, again, there's units or something, those prices can go up. Typically, like let's say in California, someone who's buying a home between 400 and 900 grand, you might be paying, 750 to $800. And what that is you're paying for an appraisal to be done. And the appraisal is the only piece, it's the only document that in the loan that basically is going to the lender or your bank that shows them that there is a physical piece of real estate that is involved in this transaction. Because an underwriter and the bank themselves, they're never going to get in a car and drive to a lot and say, hey, here's the address.
Yeah.
Is there a home on this lot? They got a licensed appraiser who's doing that, and that appraiser's job is to evaluate that property and determine a value for that property.
Right. I mean, it's also good to note, here's another thing. Remember, you are going into business with the bank, in a sense, right? So what that means is the bank is going to double check that price that you agreed upon with the seller to go into escrow is the correct value of the property.
Absolutely.
Because the bank doesn't want to overpay either.
Nope.
Right? And they won't give you a loan for an overpriced property either. It's a business for them. So you're going into business with them. So think about it this way too. You have to love the appraisal. Why? Because it guarantees you that you would not overpay for a home. Now, if you want to overpay for a home, that's completely up to you. You can put cash on top.
So what that means is, like, let's say you have a house and we look at this and I go, hey man, and it's listed at 800, and you're in a bidding war and you love this thing. And I'm talking to you and I'm like, look, based on the comps and the comparable homes that I see in this area within a mile of this house with the recent sales, I think this house might appraise, like, let's just say as an example, it looking like the value's about 800. And you go to Mel and you're like, no, I want this home. I'm paying 850. And the appraisal comes in at 850. The bank says, look, all of your terms, your down payment, that 10% that you are using to qualify, that's all based on that appraised value. If you want to pay a 50 or 100 or 200,000 over that value, that's fine. But again, the appraisal is there so that the bank has a document that proves that there is a real residential asset on that piece of land. And it tells them, here's the value, here's the square footage. It basically gets a detailed report for them that explains it. And we'll have other videos where we get into what happens with the appraisals. And
think about it as checks and balances for a value of the property that you're buying.
Absolutely.
Quick question, Dave, because I don't think a lot of people probably will even ask this. So is the appraisal cost determined by the size of the home?
It's not determined by the size of the house.
Okay.
It's determined usually by the type. Okay. Sometimes we have loans where the bank may, with certain down payments, sometimes they waive an appraisal, so you don't even need one.
Okay, nice.
But then again, it's over certain loan amounts, they will add add-ons for it. And then if it's a larger property, or let's say that someone built an ADU where they did all this remodeling and that stuff's not broken down like with the county yet with scopes, and the appraiser has to do a lot of extra work to make sure that appraisal is accurate, There may be additional charges, but again,
Gotcha.
that's good for your banker because we want to talk with that AMC and say, hey, here's this property. This guy did all this extra work. He added a bedroom, and the appraiser's going to have to go get plans, and we can kind of talk to these people and get a good estimate for you. That way, you're well prepared ahead of time for what those costs are.
So it's basically not like our third part of the major expenses, which is your inspection report.
Yep.
Right? The inspection of the home is determined by the size of the property.
Yeah, exactly.
Right? And also the type of the property. Both. Right? So we have no control over that. We hire a third-party home inspection company that we have several that we always recommend because we send them so much business. They also give our clients a nice little discount. So having the right team behind you saves you money.
Absolutely.
Okay?
And also, guys, beware. What Melvin just mentioned, a key point, when he just said for the inspection, we have a few really reputable companies that we will suggest to you. But if you're buying a home and it's an agent you don't know or something else, and people are pushing you to only use one company, keep an eye out for that.
That's a red flag. Yeah.
Because you don't know the relationship, and you go buy a house and some inspector, is casually missing out on, some major foundation issues or something else. That's something that can be a huge burden on you as a buyer. Mm-hmm. So anytime you get someone who tells you only use this company, only use this banker, only use this realtor, be wary of that stuff and always take it upon yourself, especially with the internet out there today. There's so much information available. Yelp is a great tool.
Yep.
Angie's List, all these different things. Like, take our recommendations, talk to people, but also look for a couple yourself and make sure that whoever you're working with, you're comfortable because this is for you. And Mel's going to get into the inspection.
Yeah, so the inspection cost, so you have an idea, your typical, let's say, home in Southern California, under 1,500 square feet, right? No ADUs, no additional dwellings or...
Under 1,500 square feet in California, so your typical $1.2 million house.
Yeah, yeah, exactly, right? Depending where you at, right? Culver City, our Culver City clients, oh my gosh. Insane amounts of prices out there. But however, the cost is going to be somewhere around $550, right? And now if you start adding additional items to inspect, like the sewer line, which we highly recommend.
Stick a camera down that baby and check it.
Always add that in for $150 or $200. Highly recommend it.
Last thing you want to do is buy a house, flush, and nothing's going on.
Exactly. Or sometimes what happens to the water main line could be damaged, right?
Leaking,
because
you don't know
some of
about
these homes are a little bit older and they still have the original plumbing underneath that was put in the 1940s and 50s. You want that checked, right?
Absolutely.
Because that happened to me. Okay.
Oh, really?
3-4 years in, I think it was, when we bought our first home.
Awful.
Oh my gosh. Yeah, we had to replace the water main line. $5,500. Okay, and that was an easy one because it was short.
Yeah, that's not that expensive for some of those.
I had a huge backyard, but I had a really frontage, they call it, the front space, right? But that's an easy one. Especially if you have trees in front of the house, you want to get that inspected.
Absolutely.
Pool inspections. Man, I cannot stress this enough. If you want a pool or if you find a home with a pool, make sure you get the pool inspected properly. Get it drained, number one. Get the structure of the pool inspected properly, and then you have to refill it back up. It's gonna cost you anywhere between $850 to $1,200 to do this. However, the one issue that I ever had with any of my buyers, that after the close of escrow, that they were like, Mel, I can't believe we have a pool issue, is when I told them, see, I told you to get that thing checked. Why? Because you cannot see the structure of the pool from the outside.
And it's easy to hide stuff. Hey, just fill it up with clean water and everyone thinks it's fine.
And have the water pump running all the time, right? So you don't see the water levels go down. Yeah. You don't know there's a crack on the pool, right?
And remember this, guys, Go ahead.
Go ahead.
I was going to say, when it comes to the inspection, I mentioned earlier that The appraisal is for the bank. And that means that his job is to look for similar properties, typically comparable sales. That means within a mile of this house, maybe 2 or 3 that were within 50, 60 square foot of size, same bedroom, same bath. Maybe one house a little bigger, one a little smaller, similar, trying to find similar builds and quality. But here's the important part. That's for the bank. Mm-hmm. The appraiser doesn't crawl in the attic of a property. The appraiser's not going underneath the property. The appraiser's not sitting there he's making sure that the gas is turned on and, hey, the oven works. But he's not out there checking for gas leaks and all this other stuff. So the appraisal is for the bank. And the appraiser is going to do his due diligence, which they do, but it's not to the extreme and to the level that the home inspector does. And typically with those, when you got a good agent, like my friend right here, when the inspection goes out, one thing that we 99.9% require, unless someone absolutely can't be there, sometimes he'll do like a live video with them, but you want to be there for your inspection.
Yes, 100%.
And you want your agent to be there with you.
Yes.
Because when that guy's going in the attic and he's checking things, like Melvin brought up a great point to one client one time, and the guy said, well, why do all 3 of us need to be there? And Mel said, well, what if, the sink is on in this room and in this room and you try to flush this toilet? Like, does everything work? Can we turn everything on at the same time? So there's little tricks and little things that we've learned over time where having multiple people at a house actually sometimes we've had houses where it's, hey, you turn on this, that, let's all flush the toilet. Ready, flush. And all of a sudden something happened. Something starts filling up or backing up. And we wouldn't have known that because maybe it's a slow leak. And if you're doing one thing at a time. So there's all these little tricks, guys. When we tell you, hey, be here with us, let's do this, that's because years of experience equals money saved for you.
Yeah, I mean, and I think it also, you need to be there because of 2 things, right? And this is, again, a separate video. However, let's touch on it really quick. Meaning that you want to be there because of 2 things. One, you want to know what you're buying, right? Number one. Most
expensive purchase in your life.
And then you have to be able to break down the things on this home in 2 categories, right? Remember, you're not buying a brand new home. Most people are not, right?
What can I live with?
And well, I look at it this way, Dave. I look at it as your weekend list, your weekend to-do list, right? Or the things that are major that are no-go for a property.
Yeah, can't move in without these things being
right. Like, look, foundation issues, major roof leak issues with a history of roof leak.
Main line plumbing don't work.
Yeah, the plumbing is completely shot. Electrical is all over the place, right? Those types of things are things that either you walk away from or we have the seller cover the cost of repairing those
negotiations.
For you. And that's where we get super aggressive. However, a lot of the items are going to be normal wear and tear that any homeowner is going to have in a home of
my house.
20,
if they wouldn't
30,
check my
years.
electrical panel, they'd probably be like, dude, you need to upgrade this. And I'd be like, well, my pool, my house works fine. When my AC kicks on, there's a little, but it works fine. So again, our job, again, it's not to scare people. Inspectors are on any house, no matter how new, the inspector is going to find something.
Yeah.
But again, like Mel said,
and this is great because this helps you in a sense in the negotiations and helps you actually cover for some of your closing costs that we spoke about earlier. Meaning that if we find something in that inspection report that needs to be fixed, that I'm going to negotiate extra, extra hard to get you not just how much it costs to fix it, right? Because honestly, what you want is you don't want the seller to fix it for you, right? Because they can use a really, a cheap, cheap labor, cheap parts and stuff like that. What we're going to do is we're going to itemize the repairs, right? And we're going to come out with a number. Let's just say it's $10,000. Let's just say, right? I'm going to go in there for 18 grand. Because that's just the way that I am, right?
Yeah.
And meaning they're probably going to come back like, no, we'll give you 15. I'm like, okay, we'll take 15, right? And what that means for you is you'll be able to have that covered for you. And then on top of that, an extra $5,000 towards your closing costs. Yeah. See what I'm saying? So now you're not just saving, you're getting it repaired later. You're also getting your part of your closing costs, half of your closing costs covered, right?
And again, Mel hit another target on the head is that let's say that there is a roof leak, and we come back and say, hey, look, we want $10,000 for roof repairs. And someone comes back, we don't want to do that. And they say, oh, well, instead of that, we'll just do it ourselves. How do you guys know, right? They just might get someone over and say, hey, go up there with the can and rub some Henrys on that roof.
Yep.
And maybe it won't leak for the first month that you're there in the first rain, but over time, that thing's going to come back. It's going to be major problems. So again, guys, home inspection, appraisal for the bank, home inspection.
Yeah.
That's for you, regardless of who's doing your deal. When you get a home inspection done, walk that property, ask that inspector questions, watch YouTube videos, talk to your agent. If you got a family member that's a carpenter, tape them along, because remember, do your due diligence up front, because that is going to save you money in the long run. And kind of like we said, right? This is called Clever Homeowner. This is just giving you insight, giving you the inside from years of experience, and telling you guys, these are the things you want to do to make sure that you save yourselves a headache, really.
And never skip any inspection. Never.
No.
Don't skip your home inspection for sure. Even if they're providing one for you, do not skip your own, meaning hiring your own company.
Yep.
Because you don't know where they got it from. You don't know the company. And that inspection was done for the seller.
It's like buying a used car. You buy a used car, and the guy's going to say, oh, and you hear some issues, and there's a check engine light, and the guy goes, oh, my mechanic, he said it's just it's just the gas cap is loose. Don't worry about it. You go, oh, okay, well, let me buy this thing. And you give the guy the money, you sign over the title.
Yeah.
Then you drive home, and next day you realize, hey, man, the car don't start. And you're like, oh, it's just the gas cap. Then you take it to your guy, and he's like, the gas cap? You mean the head gasket? And that's like $3,000, not $3, right?
Yeah.
So again, that's the whole point, guys.
Yeah.
Get that stuff done. Save yourself the headache.
So Dave, let's take a little sip break. What do you think?
Oh, yeah.
Man, I am really liking this beer, man.
I could smell it in here.
Oh, that's good. That's good stuff. All right, so we're gonna go to the next one, right? Which is your HOA fees.
If you're buying a house,
that is under an HOA,
which could be a condo or a planned unit development.
It could be even a single-family home.
If it's in an area where there's any place that has common entities, so you may be, it's mostly in newer style homes or newer builds. Even if you're in an area where it's, single-family residences, but maybe it's behind a closed gate. Maybe there's a shared park. There's a shared basketball court. There's a pool. Yeah. Everyone has a key card or a code, and you have to live in this community to get it. Well, the maintenance on that stuff, the builder's not going to do it out of the kindness of their heart, right? That's going to be passed on to you in the form of like an association do. That's pretty much homeowners association or just an association.
So as far as saving you money there, well, first let's talk costs, right? So your typical HOA is going to cost you between $50 to $500 a month, right? Now, if you live in a luxury, gated community, that could be up to $2,000 to $3,000 a month.
A lot more expensive, absolutely.
A lot more expensive, right? However, as far as the HOA itself, during the course of escrow, well, actually, when you're placing the offer, you want your agent to negotiate up front for the seller to pick up the cost of the documentation fee, the transfer fee.
It's expensive.
It's expensive. It could run you anywhere between $500 out of pocket to $1,000, $1,200 out of pocket.
Absolutely.
Okay. But however, if you have the right agent, they'll be able to negotiate that ahead of time before you even open escrow in that initial offer for the seller to pick up the cost of those. The transfer fee, documentation fee, and all the stuff. You keep sipping on that. I'm telling you, it's so good.
It's good.
Man,
sorry, guys. Sorry.
The six-pack is not going to be able to do it. And I have the label back here, so you can't see it. Yeah, you don't know yet. But man, this is really good. Okay, so that's for HOA fees.
And again, remember with HOAs, guys, an important step with that, even on the banking side, right? Reviewing that stuff, taking a look at those notes. And, one big thing I always tell clients, when you get a house that has an HOA, even if you're looking at this video, maybe you have a condo, you just bought one, go to your HOA meetings. Pay attention to what's going on. Because the last thing you want to do is go to a meeting and only the HOA management is there, and, they all decide that they want to make a change to the property, or there's an upgrade they want to do, and that HOA maybe doesn't have the funds and just know this, the HOA typically, like for a condo, if you're sharing walls with other people, that HOA is your insurance policy.
Yes.
And you want to make sure that that it's solid, that it's financially sound, and that the people that are managing it know what they're doing.
And that will be reviewed, right? That will be reviewed by your agent. It will be reviewed by your lender's team.
Yep.
And it will be reviewed by the underwriter as well, right? Because you can't obtain the loan if
But knowing
if,
that
if
stuff,
it's not
like
meeting all
looking
the
at stuff,
requirements.
it's important to pay attention. But the main point in that is just if you have an HOA, pay attention, go to the meetings, look at the paperwork they give you. Don't just be like, this shit's boring, and toss it.
It's a lot of paper too.
Because you might get something that comes out and you get a memo that says, hey guys, this repair was needed. The pool had this massive leak and we fixed it, and we don't have enough in the budget to cover it. So HOAs are going up $150 a month for the next 6 months. You kind of want to give yourself that space and know, hey man, shit, I got to save up this extra money or something.
Yeah, because you think that your monthly payment is going to be, let's say, $3,200. Let's just say, right? And now 2 years in, because of the HOA has gone up, now you're paying an extra $300 a month
it could be a major thing for you. So
and you're going to get all those reports, those documents during the course of escrow. That is part of your contingency. So meaning that you either agree to it or not, you can walk away. Okay.
You see something, and we've actually had a client just on that note where they were actually purchasing a property, and before closing, the seller came out and said, just so you guys know, I got this letter, and the HOA was going up like $275. And the client was like, I called and I said, hold on, what's this? Oh, well, it's after the close of escrow. So as far as this, I said, well, if this is going up, this is happening within the next couple months, I have to document this on the banking side and include this in my borrower's costs, because now I know this is happening, and this is a document we just got, but I need to make sure, that my client qualifies financially for this house.
Yeah.
And then more importantly, going over that with the client and saying, hey, look, your payment now is X amount of dollars more, so I got the documentation to the bank. Our income was still good, but our client came back and said, man, for that extra $300 I'm paying, I could have got this other place that was $50,000 more and had the same payment.
Yep.
So, looking at that stuff and paying attention to it's really important.
All right. So next we got
HOAs are boring. I'm done.
Let's do the taxes and insurance. Also kind of boring. However, at least on the taxes side, you can talk about the insurance. The taxes side is pretty easy because it gets prorated, right, from the escrow company. So you don't have to think about that. It becomes part of your closing costs. So, however, the way it works is if you have the right agent, they'll be able to negotiate ahead of time or during the course of escrow to include a certain amount of money towards your closing costs, right? So our last client, one of our last clients, she received a total of $8,000 towards her closing costs. Another client received $11,000 towards the closing costs. Right, what that means is you're saving that money.
It's recurring,
those upfront taxes.
Recurring and non-recurring, right, guys? So what you're like your taxes and insurance, those are things that are included in your loan. But as an example, right, let's say you're buying a house, and most people, their taxes and insurance called impounded. Your loan's impounded, right? Let's say that your property taxes and your insurance combined are about $600 a month. Okay. What we do on how they calculate that stuff, depending on the time of the year you buy it, 100% affects how much that is. But usually on closing costs, like 40, 50, sometimes 60% of your total costs that are included in that loan are part of your impound account, your escrow and taxes. So let's just say as an example, right? And I'll get into it quickly because it's important to know that's what this channel is for, to give you guys that info. So we'll have videos where we break like specifically on closing costs. But let's just say as an example that part of your costs, right? Your property taxes in California, the general number, if you guys are looking at homes in Cali, and you're trying to figure out what your taxes are going to be, purchase price times 1.25, hit that percent button. That's going to tell you what your yearly taxes are. Divided by 12, that's going to tell you what your monthly tax rate is.
Yep.
So that's your taxes. Depending on the time of year you close, taxes are due twice a year. Usually they're paid out, in April and November.
Yep.
So depending on when you close, that bank's going to say, hey, this escrow account, taxes are going to be due in March, and we're closing the loan in February. And they got to pay 6 months worth of taxes, and you haven't made a payment yet. So they may be collecting 6, 7, 8 months of property taxes up front, depending on the time of the year.
Yeah.
And if it's a $700 a month taxes and they're collecting 7 months, well, that's $5,000 almost that they're collecting on that loan. And that's part of your closing costs. It's not a cost going to Mel, going to me, going to the bank or anyone else. That's just to set up that account. So when it comes to that stuff, it's important that your banker or your realtor, they understand those things. And the reason that we're bringing up closing costs today and talking about that is because lenders and escrow or realtors, sometimes when you're talking to them, oh, what are the fees or the costs? They love leaving that stuff out because that's part of an escrow fee. And I can say, oh yeah, your costs are $5,000. Well, why the hell am I writing a check at closing for 12? Oh, well, that other $7,000, that's for your insurance and for your property taxes. You're not paying that to no one else. That's just going in your escrow account.
Nobody wants an extra $5,000 surprise. That's for sure.
And that's included in your costs. So again, guys, when you're buying something, make sure that if someone's giving you estimates and you don't see like taxes, insurance, and impounds on there, ask them about it. Hey, where's the impound? What are the expected? How many months of taxes? How many months of insurance are they collecting? Try to get that information because again, that at the end of the day, our job is to get you prepared of not sounding like it's the cheapest deal in the world. It's giving you real numbers so that you can prepare. Melvin's job is to say, Dave, what are we looking at? I'm going to tell Mel sometimes on a loan, I'll be like, hey, dude, we're closing this loan and the first payment's going to be due February. Like there's going to be 8 or 9 months of taxes we're collecting or whatever it is. Closing costs, let's push for this, let's push for that. So sometimes even our negotiations and our offers, we're already knowing what some of these things are. And again, depending on the time of the year, you may collect 2 months or you may have to collect 10. That's a huge difference in cost, right?
Yeah, I mean, and there's another hidden tax here in California.
Oh, yeah.
So I'm just going to give it to you straight, okay? We have a supplemental tax here in Cali.
Mela Ruse, they call it sometimes.
Sometimes, right? But the supplemental tax bill, you're going to get that separately, right? So your monthly taxes are going to be paid through your impound account. Super easy, right? You just make one mortgage payment, one total payment, and your taxes are included in there. However, after you close escrow, you're going to get a bill from California about, depending on the county and city, sometimes it's a little bit behind schedule. It could be anywhere between 2 to 6 months, okay? And that supplemental tax bill is one that I'm not particularly fond of as a buyer myself, right? And not for anyone, but however, California charges a tax of the last time the home was assessed, that price, to what you're buying it for now. You're getting taxed on that difference, right? And that the buyer assumes that responsibility. And your agent has to tell you that before you remove all contingencies, okay? So you know that that tax bill is coming, okay? Now, sometimes it's super easy, especially like on flips and stuff like that, right? Or homes that were bought.
Costs are very close.
Yeah, exactly. Or homes that were bought, just 5-6 years ago. Super easy. Now, if you have a home that was purchased, is the second owner and that thing was purchased like back in the 80s?
Yeah, 1972 in La Mirada for $76,000 and you just bought it for $1.2 million?
And that tax bill, that tax bill is coming, and it's not gonna be nice. Okay, it could be anywhere between. I don't like talking figures, but it's gonna be in the thousands. Okay.
There's things that are involved. Again, guys, the key points are as we go through these, right? Inspections, appraisal, home inspection. We've talked about HOA fees.
Yeah.
Property taxes, homeowners insurance.
Insurance, also insurance. Let's add that in. Here in California,
expensive,
right? Yeah, especially now with the wildfires, right? Every state has this thing. My one of my best friends, he lives in Florida now, right? So he has to buy, hurricane insurance, and it's just as expensive as fire insurance here now in SoCal. However, we also have here in Southern California earthquakes. Right, all of California, really, right? All of the West Coast. If you live anywhere in the West Coast, from San Diego all the way up to Seattle, close to Vancouver, you must get earthquake insurance. Get earthquake insurance because it's relatively cheap compared to what you get in return. It's going to cost you, depending on the size of the home where you live and all that stuff, anywhere between $550 a year all the way up to maybe $2,000. You have
and
$1
earthquake
million home.
earthquake's all done through a place called California Earthquake Authority.
Yeah.
And basically what it is they offer you coverages 5, 10, 15, 20, 25%. And what that means is, hey, if your house is damaged in an earthquake, you cover 5% of the cost, and then we cover the rest.
Yeah.
The cheapest one is 25%, where they say, hey, you cover 25% of the cost of the damage of your house, and then we cover the difference. But again, it's kind of one of those things where it's, if you know that it's something that can happen, and that $1,500 or something like that can save you a lot of time and anguish. Something to look into. When it comes to homeowners insurance, this is important, right? And every client we get, part of the initial, when people sit down with us, and when I pre-qual people, and me and Melvin, have these conversations, one of the big things I do is mortgage education. And part of that mortgage education is explaining the things that you have and what those things do. Yeah. So with homeowners insurance, it's real quick. This is all it is. Homeowners insurance isn't affected by the type of loan you got. It's not affected by your FICO scores or this. Homeowners insurance is looked at by two things. It's what's the replacement cost of this house, meaning if your house burns down, what's the cost to build it and put that house back up, and then all the small thing, the other things you want. You want to add flood to it. You want to add personal properties. You want to add additional dwelling coverage and all this stuff. And homeowners insurance, it isn't there to pay off your mortgage. And my heart aches for so many of these people in California that bought homes in these fire areas and had no idea. And a lot of times when you're getting insurance and people are like, oh, let me skimp on this insurance policy, or give me the very minimal so we can qualify. And buyers aren't paying attention to that stuff. They're just like, man, give me the cheapest payment. And it's important that the person that you're working with, that they're showing you these things and going, look, here's what your policy is. And what homeowners insurance is, guys, it's basically the bank saying, look, if I'm going to lend you $700,000 to buy this home, this 3-bedroom, 2-bath, real piece of property, if that house burns down and you owe me $700,000 on your mortgage, and now it's just an empty lot, and you walk away from this thing, it's a catastrophic loss for us. Yeah. So it's basically just ensuring to the bank that there is insurance coverage on that property, that in the event that property burns down, there's sufficient coverage to rebuild that dwelling to what it was before. And you can add extras, personal properties. On rental properties, we can get you loss of rents coverage. Like, I get clients that buy investments and something in the mountains, and I'm like, hey, I've got you 40,000 loss of rents for another $30 a month. What the heck's that? Well, let's say that there's crazy storm and you have an Airbnb and you can't rent this thing out for 10 months because the roads are closed with weather. There's insurance to cover that loss. So it all just comes back down to the team of people that you work with.
To give you the right info and all the info. Yeah.
Vital. Now one for Mel. Let's see, Mel. Because usually I do the loans. I'll sit with you guys. I get the appraisal done. I'll talk about numbers all day long. This is the gentleman who's walking the homes and doing stuff with you. So Mel, why don't you bring in move-in maintenance costs?
Yeah, I mean, look, the maintenance cost, well, move-in that's easy, right? You kind of know what you're going to do, your game plan as far as moving, right? Yeah. A lot of people use their family, that kind of stuff. And, moving costs, it's fairly easy. I mean, you're going to, you're going to figure that out yourself. However, maintenance costs, we actually know what that is, okay? You know what your maintenance costs are going to be because you're going to get an inspection report that is going to be about 60 pages long, right? So you're going to have a list of your to-dos there, right? Basically, your life at Home Depot or Lowe's. That's what that means, right?
Yeah. Welcome to homeownership.
Yes, welcome to homeownership, right? So you have a cost. You have a list. So that's super easy. Yeah. But here's what your realtor is going to be able to come through for you. Okay, make sure your realtor includes in the offer before anything happens or the offer gets accepted, you open escrow, anything like that, for the seller to pick up the cost of a home warranty. Okay, I always do that 100% of the time. It's actually part of my template that is already preset in there. Now, if the seller kicks back like, no, we're not covering any home warranty, blah, 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 you get a cheapskate, right? That's fine. As far as for me, I cover the costs. I cover the cost for my buyer, right? That's just something that I always do. because that's
It
something.
gets used, guys.
Because I know from experience myself, my own life, how important it is to have the home warranty. Now, as a
Absolutely.
1-year home warranty, what that covers is a blanket warranty, meaning it covers all the major things that a home needs in order to function, meaning your water heater, right? If the inspection report says that the water heater is good,
Yeah.
or it has some minor issues here and that, but it's fine, is within operational, parameters, then the water heater bursts, right? Within that 1-year warranty,
Yeah, you come home, open your garage, and it's a giant puddle on the floor.
they'll come over and replace that water heater right away with no problem. Okay, all you pay is a $75, copay thing, for them to come out and take a look at it and all that stuff, and they'll send a repair team out there and go ahead and replace it. That thing saved my life because my water heater burst the second year or third year of owning the home. And I think it was like $4,200 to replace that thing.
Yeah.
Right? So somewhere around there, or $3,500. I can't recall now. It was so long ago. However, it does save you money. So make sure your realtor go ahead and include that in there. And if they don't include it, please have them pay for it. Because it's going to be, right now with inflation, it used to be $450. Inflation rate.
Everything's expensive.
Yeah, I mean, and you could include, like, if you do the plus, that's what we do, is plus program, right? Yeah. On that, on a regular, your normal size home under 2,000 square feet is going to cost somewhere around $755, $800, okay, right now. However, we do like to add additional things.
Yeah.
So I look at the inspection report, and if I see that the home has a history of water leaks in the roof, right? And I'll go ahead and include extra roof repair or roof replacement, right, as part of the home warranty. So, or if it's plumbing, bad plumbing,
and we'll go over this stuff with you. But when you get that home warranty for the roof, don't climb up there yourself.
Yes.
Start moving shingles out of the way to find that leak, because that guy's gonna come out and say, "Well, we could have fixed it."
Yeah. So
but we don't know if it was you or someone else.
The home warranty is going to save you. Now, that's something that will be included the first year. Make sure you renew it every year after that, because something will happen. Something major will happen.
And you guys are going to hear with Mel and I a theme, right? That theme today has been like home warranties, getting them done, home inspections. Don't cheap out on them or try to save money. When it comes to your insurance, don't just go for the cheapest policy, right? And experience, again, what we've found with clients. It's just like exactly like your auto insurance, guys. Like, you come out and you're like, "Oh man, a $500 deductible is an extra $30 a month. Don't want it. Let me just get that $2,500 deductible." And then a month after you get that new car, you're hanging out, you come out, you got that Mercedes or that Beamer or that brand new truck, and someone hits that front end and dings your bumper on that beautiful new truck and cracks a light. And you're like, "Oh man, I got to get this fixed. I don't want to look at it."
Yep.
And then you go and you call your insurance and they go, "Yeah, get a quote." And you come back, it's $3,000. And they go, "All right, I'm sending you that check for $500." And you go, "$500 is $3,000.
Yep.
Well, yeah, you got a $2,500 deductible, right? And that's on just a vehicle. So imagine when it comes to your home. Again, guys, the information we give, Clever Homeowner, this isn't a get into the house for the cheapest. This is have two people that are going to negotiate the heck out of a deal for you, and people that are going to exactly that, educate you, make you clever, make you aware of things, and more importantly, talk this stuff out with you. Because you don't have to always spend the most, but you need to be educated with that information so you can decide. And now, what I've been waiting for is, now that this boring crap is out of the way, that we kind of went over with closing costs, I'm going to tell you about this beer.
Yeah, and I'm going to put it right here.
So this is from a company called Bottle Logic. Bottle Logic, you bought some of those. This place, the people the beer drinkers that like this place, they're totally hooked on it. Sometimes they'll show up and they'll be in line when a new beer comes out for hours and hours to just buy a limited release, a bottle or two bottles, and they'll pay $20, $30 for a beer. But my brother, a couple weeks ago, came to the house. Me and my wife were in the back. We're drinking some Tecate Lights with some lime, just chilling. And my brother says, Daisy, I got this beer for you. Now, this beer from Bottle Logic, he brought one. It's called Tropical Hideaway, and it's fruit. It's a fruit sour ale with pineapple, vanilla, and marshmallow.
And you can taste how tropical this is. It honestly, it feels like if you grab a beer, right, and you make a smoothie.
What Daisy said it tastes like is that she said if you took a Dole Whip ice cream from Disneyland and it melted and it was a beer.
And it was a beer. Yeah. Something like that. Yeah. It's creamy.
Yeah.
Right?
And it sneaks up. It's 5.7, but my wife got one of these and she got so happy from it. I ended up having to find a place in Whittier. I went and got her some more, and this is like now her go-to. So it's smooth if you're chilling outside, you want to hang out in a pool.
Easy to drink too.
Easy to drink,
yeah,
but great
it's
flavor.
Not, it might look heavy, but it's definitely not heavy to drink.
Pretty good, huh?
Yeah, I'm a fan now.
There you go.
This is so good.
Tropical Hideaway. Disclaimer. We don't have.
And the name of the brewery again?
Is Bottle Logic.
Bottle Logic.
Awesome place. And we have no connection with them. No, nothing but.
None of these beverages.
None of this stuff is anything where we're
just fans.
Marketing or something. We're just like, this is stuff we like to drink, so we want to share it with you.
Yeah.
Again, guys, as always, thank you so much.
Yes.
For joining us. We hope you got a couple little nuggets out of this.
Yeah.
And again, I'm Dave, 26 years in the business. We appreciate every view that we get. Melvin right here, 18 years, has his own team.
Hit that like button. Yeah. Subscribe. If you have any more questions, feel free to go ahead and hit that link to beacleverhomeowner.com. If you want to speak directly with us, just put in your info there. Super quick, easy, just a couple little things.
That called and she talked with Mel, and within a day she was in the office talking with me. Gave him some great information, and that's what it's about. It's really connecting with real people.
Yep.
Connecting real people with people that are really actively in this industry. I'm not a guy that did loans for 10 years and now I want to make a YouTube video. Like literally, I'm going to leave this right now. I'm going to go back and I'm going to go handle loans. This guy's going to leave this and go to show a home or go to one of our clients that he's listing a property for them, and he's going to go show this homes to buyers. So we're active. We literally do this as a public service to try to give information to people.
It's basically the info that we wish we had gotten when we were buying our first home.
Yeah.
Yeah.
And what our clients come to us and say, thanks so much for telling me this, or oh man, this happened. And so again, guys, we appreciate every person that takes a look. If there's something you want to hear about or something you'd love to know or you got questions,
put it in the comments.
Put it in the comments.
Yeah.
Because then we could set something up on that for you or bring something up. If you got a beer or a whiskey or something to recommend, we're down for that too. Yeah. So have a beautiful day. Be a clever homeowner.
Bye-bye.